Okay, let's talk about Cipher Mining. But I want you to forget their latest earnings report for a second. The real story here, the one that is Wall Street analysts scrambling, is a massive strategic pivot, one that could turn this Bitcoin miner into a key player and maybe even a kingmaker in the AI revolution. So in the next few minutes, we're going to break down exactly what's going on and what it really means for investors. Let's get into it.
So picture this. It's November 3rd, and Cipher Mining stock just explodes. We're talking up over 22% in a single day. A huge move, right? And when you see a jump like that on the same day they report earnings, you make an assumption. You assume they must have absolutely crushed their numbers.
But here's the twist. That's not what happened at all. They actually missed on revenue. So what on earth could drive a 22% surge? Well, the answer isn't in the numbers they just reported. It's in the complete overhaul of their business model, a huge strategic pivot that they revealed in their latest update. What we're seeing here is Cipher's AI pivot really taking off. They are strategically moving away from being just a Bitcoin miner. Instead, they're aggressively repositioning themselves to be a critical infrastructure provider for the AI boom. And this isn't some small adjustment, This is a fundamental rewrite of the entire investment thesis for the company. So here's the real story, the stuff that was happening behind the scenes. While everyone was looking at the mining revenue, Cipher was quietly inking a series of absolute game-changing deals. A 15-year contract with Amazon, a 10-year deal with a company backed by Google. They secured a 1-gigawatt site for future growth, and oh yeah, they raised $1.3 billion to pay for it all. These are the moves that are truly redefining this company.
And look, you don't have to take my word for it. The CEO, Tyler Page, basically spelled it out on their earnings call. He called the quarter truly transformative and specifically pointed to their strategic pivot into the high-performance computing space. When a CEO uses language that strong, investors really need to sit up and pay attention.
Talk is one thing, but signed contracts are another. So let's look at the hard numbers, the proof. The foundation of this new strategy is built on two massive deals with some of the biggest players in the entire tech world. And this is where the story gets really, really interesting.
The sheer scale of these agreements is just staggering. First, a 15-year, $5.5 billion contract with Amazon Web Services. Then, a 10-year, $3 billion deal with FluidStack, which, by the way, is backed by the security of Google. These aren't just one-off projects. We're talking about long-term, high-value contracts that give Cipher a level of revenue visibility and predictability that is just unheard of in the volatile Bitcoin mining space.
And CEO Tyler Page really drove this point home. He said, and I'm quoting directly here, "This is not a fluke and will not be our last HPC deal. Landing a direct 15-year lease with the biggest hyperscaler on the planet, well, that proves their model works. It signals to the entire market that they become a go-to developer for the most demanding clients in the world." So with these monster deals locked in, the immediate question from any smart investor is, okay, what's next? Can they keep this momentum going? And Cipher's answer is all about their development pipeline and their ability to secure the massive amounts of power needed for the future of AI.
And the ambition here is just massive. Beyond the deals they've already signed, Cipher has a development pipeline of 3.2 gigawatts. I mean, to put that into perspective for you, that's enough power to support a small city. This is the kind of long-term growth potential that gets the big institutional investors really excited. And the crown jewel of this pipeline is a massive 1-gigawatt site out in West Texas that they've nicknamed Kulkus. It's a reference to the Golden Fleece, from the myth, a legendary prize. And in the world of data centers, that's exactly what this site is. For a long time, the conventional wisdom was that hyperscalers like Amazon and Google would never build in these remote areas. Well, Cipher just proved that assumption completely wrong, and in doing so, they've secured a truly unique and valuable asset. So how are they even doing this? On the call, management described what you could call their secret sauce. It's this combination of having the boots on the ground know-how to work with landowners and power companies at a really early stage, and then combining that with the deep technical sophistication to design and build facilities that meet the incredibly strict standards of an Amazon or a Google. It's that unique blend of skills that really gives them their edge. Of course, a grand vision is totally worthless if you don't have the capital to actually execute it. So let's switch gears and look at the financials to see how Cipher is actually funding this massive expansion. So first, let's just quickly look at those Q3 numbers that confused the market so much at first. You had a miss on revenue, but a beat on adjusted earnings per share. It's a mixed report, right? and definitely not the kind of results that would normally make a stock pop 22%.
But here is the absolute key. For a company that is in the middle of a massive strategic pivot, those backward-looking quarterly results are way less important than their ability to fund future growth. And that right there, that's where the real story is. Cipher just recently completed a convertible note offering that brought in $1.3 billion. And this isn't just some regular funding round. This is a massive war chest that they have specifically raised to build out their HPC sites and to push that 3.2 gigawatt pipeline forward.
And the terms of this deal, they are incredibly favorable. This was the largest digital infrastructure convertible issuance ever. It was 7 times oversubscribed, which shows you the massive confidence from investors. And maybe the best part, it carries a 0% coupon. That means they raised all this capital at a very, very low cost. This one transaction gives them all the financial firepower they need for their entire strategy.
Okay, so let's bring this all together. What is the bottom line for an investor looking at Cipher Mining right now?
The investment case is just not about the price of Bitcoin and hash rate anymore. It's now about being a critical developer of AI data center infrastructure. They're backed by long-term contracts with the biggest tech companies in the world, and they have a clear path to multi-gigawatt expansion. It's a whole new ballgame.
Now, no analysis is complete without looking at the risks, and these are pulled directly from their SEC filings, so this is important stuff. There's tenant credit risk, especially with partners like FluidStack, though the Google backstop does help with that. There's geographic concentration in Texas, which exposes them to regional regulatory and weather risks. There's always execution risk in delivering projects this huge, and importantly, they've noted a material weakness in their internal financial controls that needs to be fixed. These are absolutely critical factors you have to weigh.
So, we end with this question. Cipher has secured world-class partners. They've put together an enormous pipeline of power, and they've filled their treasury with capital. They have moved beyond the volatility of Bitcoin to build long-term contracted infrastructure. The big question for investors now is whether they are successfully building one of the essential toll roads for the AI revolution. And based on the market's recent reaction, it seems a lot of people are starting to believe they are.